Breakout or fake out? Got a nice 2-day rally, Friday strong day, Monday strong follow through. Just is this expansion of a yearly trading range up here in the 4,000s? Or is the Bulls going to take control today? Well, they're behind the eight ball right now. We'll discuss a slew of earnings reports, and if you're clicking on the headline number, you better be good because there's been some major reversals in some of these earnings stocks. I guess people aren't using tape anymore. 3M, that's in the gutter. We got some good reports to discuss too. We got some crazy guidance in the lithium sector. We're going to talk bank stocks. And get your bank stock questions ready for Nate Tobik. He's coming on at 8:35. Mitch, let's get things going.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. Let's take a look at some of the commodities and futures here and then get to these slew of earnings reports. We're in the red by 12.25 handles. High close for the year, 36.50. Didn't spend much time above that. Bulls are going to have to step up here. I'm not seeing any real good support in the market, but hey, it's two strong up days. People are going to be looking to buy the dip, perhaps. The buck down marginally, 14.6 cents at 101.77. Your bonds are just up a few ticks. You can see the major resistance at 132.5, 133. Oh, crude's a teaser here. Do we want to bust through this double top at the 82.67 area? Or are we going to roll over and go back down into the middle 70 handle? Gold having another good day, pressing up 960 and 1938.10. Silver, weak yesterday, a little bit strong today, up a quarter, 23.81. And Bitcoin has a handle on it. It's a 23,000 handle, down $65 at 23,025. Let's bring in the master of after hours and pre-market disaster, Triple D. Some fun reports today, huh? Fun reports.
Yeah.
Are you clicking on that first number and scrambling?
Oh, yeah. Those news algos, and we've talked about this relentlessly on this show for the last, feel like, decade. But those news algos are often just on the wrong side of the trade. You look at the initial numbers like beat, raise, buy, and it goes up a little bit, and then they pull the rug. Or it's like miss, and lower guide, and they sound. Oh, wait a second, we got a reversal here on our hands. How does that happen? Why does that happen? Let's talk about it. Let's give some examples first. Do you want to start? Where do you want to start? General Electric? General Electric.
Good old
It's a good example.
Okay. All right.
Okay, and we're going to bring Money Mitch in. Mitch in.
Who is that guy?
Fire Mitch up today. Come on,
Who
Mitch.
is that guy?
Who is this guy? He's in the background. I can tell. All right, Mitch. We're going to be methodical. We're going to do the numbers. We're going to move on. We're going to have our guests. We're going to do everything in order until Dennis goes on a rant.
Well, we kind of already did it, but let's keep going.
So
let's do General Electric. Let's go to General Electric. Of course, I'm happy I got out of my swing trade short. That's first of all. Yesterday closed that. General Electric adjusted Q4 EPS at $1.24, beat the $1.13 estimate. Sales at $21.0 billion, missed the $21.59 billion estimate. GEC's 23 continuing EPS at $1.60 to $2 on the high end versus a $2.37 estimate. Revenue growth in the high single digits, yet getting the lift.
Yeah. So what happens? So GE, significant lower guide. That's a significant lower guide. And look what they do off the hop. They hammer this thing down in the 77 handle. So down about $2.50. But what do they do then? They're like, let's buy them anyways. Why does this happen? Obviously, just speculation. We don't know who's trading. I wasn't me trading it. I wasn't trading GE this morning. But I speculate that a lot of this goes on, that you have the initial news algo that comes in, and if it's a miss, they hit it. If it's a beat, they buy it. And sometimes the devil's in the details, but sometimes it's just no details and it doesn't even matter. If you're a big hedge fund, and you've proposed this, Joel, before, if you're a big hedge fund and you're long G and you see it trading on very light volume and you're like, screw it, I'm going to buy some more stock. They try to push it around a bit. And then and it doesn't take much on that headline number. They buy a little bit, buy a little bit. Now they got this thing going scratch. Now people are scratching their heads like, well, I thought it missed. I was a lower guide. And all of a sudden it goes green. And you're like, well, what do they like about it? That's what the media all of a sudden grabs. Well, what do they like about this report? Oh, they like the beat. And then it's off to the races. Don't kid yourself. There are big players that push price around. So you can't always just say it makes sense, and they've found something in the report and it's all based on fundamental information. Sometimes it's all based on big player hedge fund positioning, and they will push price around. So maybe there's a big boy that's long GE and they're like, nah, we're not going to let this thing go down here right now. You don't know who it is, and maybe it's not. Maybe it's a big girl too. We don't know. But in any regard here, I think somebody says, screw it, we're buying this back up.
Sounds like
a great report. It was a significant lower guide, but stocks trading higher, can't argue with price. Sometimes it doesn't make sense.
Sounds like you got a new chapter in your behavioral finance book, Dennis, that you need to write. This is
totally happens. There is people who push price around, especially on some of the smaller ones. G is pretty big, but again, when it's trading on the number, and Joel, you could probably say, when it's trading on the number, everybody's backing off and waiting. So everything becomes illiquid on that earnings release. So I'm just saying, if you're a big boy,
you can show some size too. You don't even have to get executed.
Scrambling. The news algo just hammered it, so you're going to catch them for sure. Yeah, I think that goes on. I think there's pushing around a price. They're not doing anything even illegal. They're just saying, "I'll buy it."
Yeah, and just putting the order out there,
and they're buying it up.
Yeah, I don't even think it's spoofing. I mean, because if you throw something out, like let's say this thing, I'm just giving a hypothetical scenario here. You ticked under 77, right? Yesterday's low is 77.54. If you have the trading capital, you go set just like out of nowhere. You go, okay, 77.50 bid for 5,000. Okay. You sweep the book, right? What's ever there, and then you probably go to the bit. I don't know how liquid.
I don't even think they need to show size, Joel. I think they just need to start lifting offers.
Yeah, true.
And you get the thing go green, and then the media is like, it's like Verizon CEO on this morning. So, and Becky Quick asking, why is your stock trading down? It looked like pretty good numbers. Why is your stock trading down? You're asking them what the market participants are doing. You don't know what every algo is doing. You don't know what every hedge fund's doing. It's not as simple. It's not the simple formula like beat, raise, stock goes up, or miss, lower guide, stock goes down. It doesn't always work that way. It sometimes works that way. It doesn't always work that way. And there's a lot of other reasons. There's a lot of other participants. To Spinner's point, he always mentions expectations. We do too. If expectations are higher going in, potentially, maybe that's not a bad thing. But G was doing pretty well going in. This, you would think, would be a reason to sell the stock. I would think logically with that lower guide, which is significant, I would think the stock would be trading lower on that. But it's trading 500,000 shares. It's trading higher. And now the media gravitate to it and they say, oh, they like this. They'll find a reason. The media will always find a fundamental reason when sometimes it's just market mechanics.
Technicals are a little bit tough. I'll give you the pre-market high on this one. That's up at 82.49. So if they really like this report, if they really like the lower guidance, then they shouldn't have any problem. I shouldn't say any problem, but let's go up and test the pre-market high. Coming back on the downside here, I'm looking at yesterday's high for a gap fill. You could definitely see that at 80.02. And I guess a focus day would be the main focus number would be that this high close for the move at 80.49. That was on the 17th. This has just been, this one caught a bid in mid-December. It's just having a great year already. And boy, oh boy, yeah, look at this. You see this GE Healthcare too? I mean, this is
Ripping.
just, yeah.
This has went from piss to bliss since October.
GE,
this thing has
baby.
Turned, not just GE altogether. Because imagine, you look at this GE chart and you think, oh, it got hit. It never got hit. You got the spin-off. This thing, you got to add all that up. So that
Joe,
85 down to the 66.
You don't have GE?
Put that
I'd be
chart
so
and put it back on top, Joel. Because the chart doesn't adjust. So if you look at your chart, and I get confused with all these charts you got there, but show me the 3-month chart on GE. Where is it?
The monthly is right down here.
Bottom right.
Yeah. But if you want to go 3 months, Dennis, this is 2023. The upper right chart.
Yeah.
So this would represent January. And then will you see the December?
Well, yours adjusted. Mine didn't adjust. So that does look good, actually. Yours looks way better. I got to go to your system. Mine didn't adjust that chart for the spin-off. I'm still looking at the thing from it was like 85 before. It's not. That's why your chart looks better. That's the real chart. Top rate's the real chart. This thing's been a monster.
Yeah, it has. But we'll see. We'll see if they can close.
And the value trade helping it too. But I mean, significantly lower guide. You think they'd hit the stock? Nope. You think?
We'll see. I mean, someone made a good point here about the liquidity coming in, and that does make a big difference at when the liquidity comes in at 9:30, because
100%.
you could have. I mean, this still trades pretty good volume. Like yesterday, it stopped at 80.02, so you had probably a decent order out there at 80. So. We'll see it. Important to open up here and man, gap fill. I could see this getting a gap fill at 80.02, and perhaps I don't know about testing the pre-market high, but we'll see that with GE. One that I looked at and I just caught it too late. What about the Poppin' Johnson and Johnson? I mean, were people looking to get the hell out of that stock? Look at that thing. Dennis, did you get down and dirty in this one?
No,
this thing got 170. This got to
170. I traded it last night ahead of it, but I didn't take it through.
All right, let's give their numbers. Q4 adjusted EPS at $2.35, beat the $2.23 estimate. Sales at $23.7 billion. Missed the $23.94 billion estimate. Johnson & Johnson sees fiscal year 23 adjusted operation EPS at $10.40 on the low end, $10.60 on the high end. Operational sales at $96.9 billion to $97.9 billion there. Johnson & Johnson pulling right back down.
You know what the problem with Johnson & Johnson in this earnings report was fine. What the biggest problem is that drug stocks aren't in favor. We're in a risk-on market, Joel. Drug stocks are risk-off. So you get a counter move. We've been going down for basically January because that's the January effect. The conservative drug stocks with the P's is 16 or less. Ow. We don't want those. We want the no money making Cathie Wood type stocks this year. So now you get a counter move the last 3 weeks, and there's always going to be overhead supply. So it's slammed. So it obviously was a good report. I thought it was fine. Stock was trading higher, but they pull the rug out because, hey, this isn't the January effect stock. This isn't the kind of stock we want to own in January. So that's the problem there is the drug stocks are out of favor right now. I do think J&J, get down to that 160. You want to put something in a long-term portfolio? Probably not a bad bet on J&J down at 160. It's $6 away from there. I don't know if you wait or if you go here. I'd put it on my shopping list, though, because I think the market eventually turns, and J&J is going to be a stock that holds up better if the market does go to turn.
All right, you are now, after being significantly higher, you're in the red here by $1.34. Nothing much here. Just you had a spike low back in November. I'm not sure. That was probably some drug news. Well, you're right there right now, 166.82. So if in fact you can hold that, man, maybe get to the bottom of yesterday's range. We could be an easy, not easy, but a pop to 167.95. Your close is right there at 168.31. If you do lose that 66.82 low, man, there's not much in here, Dennis. There really isn't. But so far, a wild day in Johnson & Johnson, and I saw it trading up like $1.50 or something when I first pulled it up, and I'm like, Well, what about 172? Does anyone want to sell it like the 4-day high? And they did, and then some. So J&J under pressure, January effect.
It
The
is.
winner, ride it in, and now under pressure. I don't think I'd be trying to buy the dip in this one today.
No, I like it at 160. And again, you've got to separate it. So we got multiple people saying, oh, now I don't like the drug stocks. I like the drug stocks long term.
Yeah.
I've been adding to drug stocks long term, but I don't have them in my trading account. I'm not day trading them long. I'd probably be day trading the drug stocks short because you still got the January effect happening here. I do think it will turn. I do think you get to some of these to reasonable valuations. But I sold my Merck. I told you I sold my Merck.
Yeah.
I sold my AbbVie. I sold them all back December-ish because I was concerned that eventually that these things weren't going to last and hold up. And if it turned in January, which it absolutely did, drugs would go out of favor for at least a few weeks and the growth stocks would come back into favor. That is still continuing here. There's been no signs of that stopping. I mean, you got short squeezes going on, the Bed Bath & Beyond blasting off and Carvana blasting off for a few days. Kathy Wood making new highs on the year here yesterday. So you can't argue with that. Trade, the momentum. So I like to invest. I kind of invest contrarian, but I trade momentum, and you've got to separate it. I've got a lot of stuff in the trading portfolio that makes me kind of throw up in my mouth because it's a lot of junk, but the junk is paying the bills right now. That's the stuff that's actually working. So you got to separate it. But, if you're thinking with your long-term hat on right now, you're buying J&J at 166 on the dip. I won't argue with you. I think it's going lower. I think you might get it at 160. But, I put a little bit of Pfizer in the long-term portfolio. I'm early on it, but that's in the long-term portfolio, not looking at it, not on for a trade. Bristol Myers, I put a little bit of that on. I'm actually up, I think, $1.50 on that one, but that's in the long-term portfolio. So I'm kind of just reallocating. Sold some drugs into December. Some of them have come down significantly. If AbbVie comes back down to like that 130, I'll probably reload that thing. So again, separate it. So trade momentum, trade what's going on, but I invest a little bit more contrary. I invest on fundamentals. So if I see, the P's, they make sense. Again, I don't know. Maybe I'm doing it wrong. Maybe I should just invest on momentum too. But then I would be trading all the time. I try not to trade that long term.
Yeah, you can't do that.
Well, you can. Some people can do it. Maybe I could do it. But I think I do a worse job when I'm over trading my long term portfolio. But I'll tell you, the day trading portfolio outperforms my long term portfolio every single year. Every single year. My day trade. So people just ask, why don't you just day trade everything? There's an argument there. The only thing is I'm working that money. There's work that's being put into that. There's not as much work in the long-term invest portfolio. You buy something, you forget about it, and you move on. It's 10 seconds of work. Execute an order and move on. I log into my investment portfolio maybe once a day, take a look. Maybe I do a little bit of allocation, and that's it. But I don't know. Investing, I've always said, I don't know how great of an investor I am. I know I'm a really good trader, though. So I've done okay investing.
It's tough,
my accounts went up
it's tough
over the long run, but it moves with the market. Like market bad year last year, my investment portfolio was down as well. So my trading portfolio was great last year. So I guess it depends on what you're trying to accomplish.
All right, Mitch,
I think the question of the day today that I wanted to really ask, and we'll get back to the earnings, but is this a new bull market cycle? I think that's what a lot of people are trying to think about, right? As we get past the 400, there's some people saying we ain't never going back down to those October lows. This is the new bull market. What do you guys think about that?
Joel, you're silent.
No, because we've just had a significant rally. We're moving into earnings season. So far, this has just been, it's been more of like a trading range market. So with the numbers that I'm seeing so far, a bull. There's going to be bull markets and stocks, and it's just another rotation. I think it's a steady market. I think people overshot the whole recession thing, but right now, all the numbers are indicating that the market is going up. The levels, the support is moving up. The reaction to some of the news, everything. We're having a good year. So goes January. So goes the market. I couldn't, it's not going to be a bull market like you saw coming off the COVID lows, and it's not going to be like the bull market that you saw in 2021. I think there's just too many.
Will it be a bull market?
I don't
It's
think
good. I'm
anybody
more of a
knows.
range-bound market than a bull market.
Range-bound. All right.
I think so. And, we can argue, and again, it's just been rotation this year. We're just getting the opposite rotation of what we got in November. And the people who are saying the January effect is nonsense aren't listening to the show because, we called for this January effect on this show.
Yeah.
It is not a coincidence that all of these stocks started to pop in January. We predicted this for 2 weeks. We were talking about almost every single day coming into January that these growth stocks could turn come the calendar turn. I was tweeting out about Tesla and they were saying, oh, it needs to do this and I need to do this. And I tweeted out, you can go find my tweets. I'm like, you know what Tesla needs? It needs a calendar turn. It needs to go to 2023. And that's all it needed. It went to 2023. It waited 3 days and then it blasted off.
It did.
The January effect is real, folks. This seasonality stuff is how I make my living. It's not crunching balance sheets and trying to figure out. It's not just charts. I make my living on different effects that work again and again and again.
And this one's more even, I would say, just psychological, right? Because
it's not
necessarily that things have just gotten all of a sudden rosy, right? It's just more along people want to buy. They've been waiting.
Well, and stuff was oversold. It was such a good setup because it was so oversold. Tesla was so ridiculously oversold coming in. And then you got the downgrade on that third day, and then they just bought that. And when it reversed and closed higher, the day it reversed and closed higher on that downgrade was the day to go green light on Tesla. And, I wish I would have loaded up. It stayed right there. I did buy a few other stocks. Obviously, I've participated very well in some of those growth trades. I've had some really good ones. I'm beating down names. Like I said, buying the stock, pressing the buy button, kind of throwing up in my mouth a little bit on some of these stocks because I'm like, man, this is a really bad company I'm buying. But it's just the calendar effects here. And some of these really bad companies are the ones that are outperforming everything else in January. Some of these things are up like 40, 50%, man.
Did you see this Wayfair? This Wayfair?
The Wayfair is unbelievable.
50%.
Again, that's on the high short interest, so it just fits all the bills. Beaten down, high short interest. Cuts the jobs because that's the new guidance raise. When you cut in jobs, you get the new guidance raise. Then you get the 3 analyst upgrades yesterday. Just
there was 3, huh?
Lemmings chasing price. Unbelievable.
Hey, man. That's how it is right now. We're living right now in the hopium. The only thing is, can the hopium stick around? Let's get to some more earnings
I think I did. People are saying, why didn't you tell us to buy Tesla? I don't give investment advice, but I think I clearly said when Tesla was 123.
You said 150.
I said I like it to 150. I said it at least 2 or 3 times.
I've said it also on different shows, Dennis.
I cannot tell you what to do. We don't give recommendations.
That's not what we're here for.
I could say if I like it or I don't like it. I said I like Tesla to 150. It almost got there yesterday. Got to 145. It's not quite there. I still like Tesla to 150. It's still in charge. Now, it's getting long in the tooth now, though. Do you want to sit around for the last $4, $5? 101 to 144 has been a pretty good move. But I think clearly I've said that I've been liking the growth trade for the last 3 weeks.
Wow, I think that was the Citigroup that did that because this one did make a new low. This one was a little bit sneaky because you had that you ended the year at 123.18, got hit on the first day of the year, and then Citigroup bottom ticked it. I believe it was on January 5th or 6th here. Yeah, you went to 101.81, and I know everyone. I know before I left, we were like, "Oh, this thing has a date with double digits. It's got to get to 100," and then boom, it analyst rating turns. I believe it was on the 6th. They beat it down, put that low in. I don't know. We'll see what happens. Yesterday's high. I think this is the same thing with the market, with the S&Ps, with your stocks that you're trading. That was a pretty significant tumble from the intraday high. We sold off 40 handles. I mean, I know it was still a good day in the market, but when I see, it just wasn't, like people came in like, okay, this is, I'm taking some profits here. I bought at 3,800, 3,850 to begin the year because that was a big move. And then now the fact we got a little follow through for the downside, bulls really got to step it up today. I'd be, for us to close green today, we got Microsoft after the close, right? We got some big earnings reports coming up.
Things can change.
Yeah, in a heartbeat. I mean, didn't Microsoft already warn? Didn't they already guide lower?
I mean, they're cutting jobs, right? I mean, they're not doing that for no reason,
well,
right?
that's a good. If I hear that GE invested 10 billion in that Chat GPI one more time, I think I'm gonna. I mean that's like it's like recycled news. Did they invest 10 billion like 4 times? Like I keep seeing that. But let's get back.
That's all they do is recycle news, Joel. I mean, and then they trade on it again. The Wayfair is recycled news too. They give the job cuts, stock goes up $8 on the job cuts, and then the analysts come out. We like the job cuts. It goes up another $8. There's recycled news.
Google CEO.
Welcome to the market. Welcome to Wall Street, where we recycle everything. I guess that's good for the earth.
Google CEO had a meeting yesterday, like a town hall event for the job cuts. I think one of the comments that I think is very important to catch is he said that with the expansion of 2021 growth with 41% revenue growth, that Google expanded headcount to match that expansion. Pichai said that the company would assume growth would persist. This is not what's happening. Clearly, he just gave you the insight there. He's saying growth is not persistent right now. He's seeing growth slow down. So that's why he cut the headcount. So if anything, what is he telling you? What's coming ahead? The future earnings. I just feel like everybody's just focusing on the short-term gain for the headcount loss, but not thinking in the long-term loss in the revenue going forward, the earnings going forward.
Well, they did some crazy hiring. They did.
And they need to get out the fat. This is necessary steps. My problem isn't what the companies are doing. My problem is how much they're rewarding them for this.
Yeah, that's exactly
because that's where the problem lies. They're doing the smart things, but they're all of a sudden just like you're doing job cuts, and Wayfair goes up 50%. I mean, this isn't like we're growing revenue. We're not growing earnings here. We're cutting expenses because we're not doing as good as we were last year. So, but that's where my problem lies. Is I don't get why they're rallying the hell out of the stocks for doing it, but they're going to continue to do it. Multiple companies last night, again, they're seeing what's going on. Oh man, we cut some jobs. We actually do save some money, and our stock goes up 10%. So why not? So you're going to see this. What you're going to see in this earnings season coming is probably some lower guides. If they're lowering guides, they're going to announce job cuts with it. So if they're going to lower the guide, they're going to announce the job cuts with it to try to prop the stock back up.
Bring the bar back.
That might work.
3M did it here. Let's go to 3M right quick. 3M Q4 adjusted EPS at $2.28, missing the $2.36 estimate. Sales at $8.79 billion, beat the $8.04 billion estimate. They do see fiscal year adjusted EPS at $8.50 to $9 versus a $10.22 estimate. So still big miss there on the full year 23 adjusted EPS. And then they reduced 2,500 manufacturing roles, trying to give them a little lift.
Again, this is not the stock that is sexy right now. It's cash PE 13, dividend 5.1%. The stock earnings, not great, but by any means, this isn't the one they want anyway. So this is not the earnings season, at least early in this earnings season, to be looking, at, taking these things, the Johnson & Johnsons and 3M's long into the reports. Because even if they beat, they might actually go down because they're just not the stocks that are in favor right now. The little growth stocks are in favor. They've been in favor for 3 weeks. You can't argue with momentum. That's where it is. It will turn. There will be a turn here again. I don't know the timing of it. I think it's going to be a tape bomb from one of the big guns that turns it all.
That's what you've been saying.
And that's what I'm predicting. But we haven't had that yet. So you might as well keep playing growth from the long side until Apple comes out and warns, or Microsoft comes out tonight. I'd be a little scared going through the Microsoft report here tonight, but maybe it's going to be fine. And maybe and you know what the other thing is? They could warn and do the job cuts, and maybe the stock goes up, and maybe they're fine too. That's a curveball. The job cuts is a new curveball here because they are all about
the way they've been. I saw Christian.
Right now.
I saw Christian tweet out about. Does anyone have any studies? And this would just be short term. I'm sure you could do it. It's like like Amazon did it. All these companies. What the initial reaction was, right? where it was a week after, and where it's at 2 weeks after. I think Amazon is still above that level because that people have gone back into the mega cap technology stocks. But the only thing I want to say about 3M is this thing has been a dog since 2018.
Yeah.
I mean, throw out the pandemic.
Lawsuits.
I mean, this has just not been the place to be. So looking at this down 542 today, you can lick your chops on like a day trade or something. But man, and they didn't say anything about that lawsuit, but
and that's the issue. And some of that has been they're not beyond it, but some of it is starting to get a little bit of like clarity to where that's going to be. So I think, there's a certain point in time, maybe 3M is going to be a buy because that is really what has weighed on the stocks, and they're starting to get more clarity there. I mean, this was a $259 stock. Some people were worried that these losses were going to get so bad that it was going to actually put the company into bankruptcy.
Yeah.
I don't think that's happening here. And I think we're starting to get clarity that that's probably not going to happen. But at the same time, that's, what this market is worrying about here. Somebody notifying us, yes, Bed Bath & Beyond, the short squeeze continues, up 21% here this morning. It's come off significantly, and now it's coming back up here. And again, it's going to be back and forth here. I don't know if there's a headline driving it this morning or not, but Bed Bath & Beyond just went up just to take you on the tangent there.
Oh man, come on, man! I got enough to talk about, team. We gotta go.
Bed Bath & Beyond
now. Come on, man! I thought we put it to Bed Bath & Beyond. I was
the
done
short
with
squeeze
it.
continues in so many of these names here right now. So again, you've just got to respect it. I've been playing a few of these names just because when these things start squeezing, I'm not in Bed Bath & Beyond, but we know I played Carvana for a little bit there. I was playing a few of these other names. You go to the list and you see, well, what has high short interest? Whatever has high short interest right now is really outperforming in January. And again, it's not even high short interest. It's just
January is almost over.
Down crap is
January is almost
day.
over though, right? Just
What's
to kind of point that January is almost over, right?
I know you got it. Short leash on all this stuff. That's why I don't even talk about these because I'm going to be trading out of these at any given moment. I don't know when I'm.
It's not the February effect, right? It's not the February effect.
Well, there you go, Mitch. So the calendar isn't going to help us here. You're right, Mitch. You're coming towards the end on probably some of these trades here. So you just got to be cautious. But I mean, you can't argue with it right now. If you went to that high short interest or whatever, all the names on there. A lot of those names, probably 75 or 80% of them have had a pretty darn good January. Definitely. So that's what's working right now. And I've been playing a few of these names. I don't talk about them because I actively trade them. I don't talk about the stocks that I'm actively trading. But that list, the list of the high short interest has been moving.
Yeah.
The whole month they've been moving.
And they got that $5 threshold and then came back down. But yeah, hard to do technicals on this one. Go ahead, Mitch. We do have a guest today. We do have a guest, and I'm looking forward to talking to Nate Tobik.
Yeah, we're gonna get into the
bank data report because I really this JP Morgan, it kind of kept me out of like the bearish camp. The way that was holding on, it had the good earnings, but we'll do that. Do you want to sneak one more in here?
What I'm going to do is I'm going to actually do a threefold earnings report. We're going to go through the industrials here now. Of course, two of them are going to be more defense names. One of them more in the battling Dennis's name. And why I'll say that is because Picard showing strength, baby. We'll give those earnings. Doesn't want to turn around. Picard earnings.
I like that.
EPS at $2.64, beat the $2.21 estimate. Sales at $8.13 billion, beat the $7.11 billion estimate. I was looking at this chart to see if it was going to hang on 100. I think this one likes to play catch up to cat and deer. So we'll see if this can continue the cat in the hat. That didn't show that much weakness yesterday. Deer a little bit showing a little weakness. And then the defensive names like Lockheed Martin coming in also today with a beat and a beat. Also nice fiscal year EPS coming in here at $26.60 and $26.90 over the $26.93 estimate there. Net sales not looking too bad either, right in between the estimates. So Lockheed Martin not doing too bad, a beat on EPS and a beat on sales. I think I'd sell
Lockheed Martin. It's just my opinion. This is one that's obviously had the January effect the opposite way. Sets up like the Johnson & Johnson. I didn't even look at the report, so I don't have the numbers in front of me. But just this is the kind of stock that they're not into in January. It's obviously had a very good, so it's again the opposite. So it almost sets up like the Johnson & Johnson. If I was in Lockheed Martin, I would sell it here. Just my opinion.
Yeah, we get a pop over 452, but man, that's just under. If you get to that 452, which doesn't feel like now it's a good $5 away. 453.5 is a good number on the upside if the rally continues. Doesn't feel that way. S&Ps are leaking here too, making new lows on the pre-market session. I'd be for this one. Focus number 446.83. That was yesterday's high. And we're kind of getting in that area right now. Close at 441.28. I agree. Kind of looks like the Johnson & Johnson chart. And then what else did you? Johnson & Johnson still sinking. And then what did the other two you gave?
Car. If you want to take a look at that one, give levels on that. And then
what's that?
Just wanted to peek on Raytheon in a second. PCCA or PCCR. Pacar.
Yeah.
No, PCAR.
PACR. Yeah.
PCAR. You're guys transposing everything here. Come on.
Yeah, I normally go to it, but I like this. I like it. It's holding that 100 really well on the pullbacks. Look at those 97s holding on pullbacks too. I like the chart.
I'd be a buyer at top of yesterday's range, 103.06, and on the upside here, if you get a look at the pre-market high, that is 108.87. This is a wild one breaking out. Let's see if it holds. Only 11,000 shares have traded. Not chasing. S&P still making new lows here on the pre-market set. Just a slow leak, not a big flush or anything.
Keep an eye on Tesla. If you're trading the growth names, it's the name you're watching. If Tesla goes to roll over, growth will roll over with it. If Tesla goes and turns around and goes green, growth will grow with it as well. Tesla continues to be your leader. If you are trading the growth names, know your leadership. It is Tesla.
Okay. All right. Let's go ahead. Let's get out of this conversation. Let's get into the banks. Let's get to our guest today. All right, we got Nate Tobik here, investor, founder of CompleteBankData.com, author of the Bank Investor Handbook. Check it out, team. Welcome back, Nate.
Morning. How are you guys doing?
We're doing well here. Boy, oh boy, we had a brief conversation yesterday, and I just want to go to the biggest bank of all, J.P. Morgan, and we can take parallel off that. Boy, what a nice! It just wouldn't go down ahead of earnings. Big earnings day, but then I look at the fade here. So as much as like J.P. Morgan, that chart kind of hanging on, kind of kept me in like the bullish camp to start the year. The way this is fading now, I don't know. I mean, it's just been hanging on for dear life. Talk about the bank earnings thus far with J.P. Morgan and some of the other mega banks.
I mean, so it's these stocks are kind of like a mirror. And so it's kind of what Dennis was saying. It's whatever people want to believe on these things. Yeah. So the earnings are great. A lot of the big banks, the yield is expanding because they haven't raised their deposit rates. Loan rates have gone up. As long as that persists, those big banks are going to continue to kill it. At the same time, there's like office defaults. And so people are like, oh, well, maybe the other shoe's going to drop. But it hasn't. The predicted recession still hasn't hit. And so some people are looking for that. It's like the shoe's about to drop. There's a little weakness. Like I saw PNC, they beat, but they didn't beat by as much as people thought they would. So it was like, maybe the shoe's about to drop with them. Well, they're still doing well. Earnings are still great. So is it going to continue? I mean, unless something changes fundamentally in the economy, the earnings are going to kind of continue the same path.
And just with, the course of interest rates here, we talk about, the cycles and how long it took to, bring inflation down and whatnot. I mean, we're probably still in kind of like the early stages, right? I mean, the way the Fed has ratcheted up rates, it takes a while to filter through the system. So even if rates start to stabilize, here, maybe, we'll obviously benchmark on the next CPI report. How long do you think, the positive lag, will continue with just, I mean, the biggest percentage raise in interest rates we've seen in decades?
Well, I mean, so it varies by bank, and so what I'd say is I would, unless you're in a small bank that has a bunch of depositors who don't know what's going on and are happy with 0%, those probably aren't the banks to be in. But larger ones with a diversified funding base and the ability to, demand larger deposits at lower rates, they're going to keep that attractive funding. So excuse me, the larger banks are going to have the advantage here. And you're right. I don't think yields are going to drop. Even if inflation slows, price levels are higher. Everyone still is looking for a raise. That there's an effect to that. It isn't like every price is just going back to what it was a couple years ago. And because of that, the rate environment is sort of staying the same. Now, what we do have, which is interesting, is, it'll be interesting in the spring because we have a whole set of people in the housing market who have, essentially the golden handcuffs. They've got the 3% mortgage, and it's going to be nearly impossible to get them to ever sell and move. So, I think what a lot of people have been expecting is, hey, there's going to be some housing market crash. I'm not sure that's actually the case because I don't think there's enough inventory to actually supply the demand of people who are going to be moving and buying. And I think prices are going to stay up even with the higher rates, which, that's not how it's supposed to happen according to the textbooks.
You know what else the problem is in the housing market is the input costs. It's like to rebuild a house now, and I just went through it. It's so much more money. Yes. So I'm like, who is, going to, like, you're going to always have, the house that's existing is going to hold up. It's a made up of input costs. So people will look at this and say, well, if this house costs $500,000 to build, but I can buy this house for $250,000 or $300,000, it's going to hold up because it's just a matter of dollars and cents. Like labor costs are way up, material costs, even though lumber has come down, still a lot of materials and inputs into the houses are way up. So, I mean, that's a consideration too. That's why I don't think the housing market crashes either.
I don't think so. Now, what is starting to show cracks is the office market. And so, like, it was released yesterday. KBS has a couple office REITs, and one of theirs just suspended investor redemption. So KBS REIT 3, and that's because they started to default on some of the loans on their offices. So that is the undertone is people haven't gone back to the office. Some people have, but not enough. And rent isn't being covered and isn't enough to cover the mortgage payments in some of these cases. And so that's happening. The question is, what ultimately happens to the banks who hold these notes? They're probably regional banks. So like, the PNCs, the region financials, excuse me, those are going to be the lenders. So the question is, do they have a balance sheet that's able to absorb that? And it sure seems like it right now.
Give us a couple office REITs to take a look at here.
I mean, so it's KBS REIT 3. I think they have 3 REITs. Well, I know they do. The ticker on that one it's KBSR, I think.
Okay.
It's what's interesting is if you look at the chart, they've paused investor redemptions. They haven't really done it. It hasn't really moved much. I mean, if a fund just says, hey, we're going silent because our losses are so bad, and it's kind of sitting where the chart I had, it was.
Yeah, it doesn't trades by
which stock?
This is the KBS REIT.
Yeah, you gave it to me before. KB.
I think it's KBSR. Yeah.
KBSR. Okay. Yeah, Donna. I don't know. That
doesn't really trade.
Yeah, it doesn't trade a lot. What are some of the big ones, Dennis? Like, they're just escaping, Dennis. What are some of the big office REITs that?
Which one are you thinking about?
Oh man, they own a bunch of New York properties.
Hey, let's do it.
This is why Mitch is here.
I got you right here.
I'm not a big office
biggest one is DLR. Biggest one by CREP is going to be DLR, like a digital reality trust. Then you got also ARE, Alexandra Real Estate.
There's a bunch of them. I don't know what they hold though.
Boston Properties. I don't know how you
Boston
guys feel about Boston.
Yeah.
Oh, BP. Okay, that was one. Yeah. Okay. Whew, that's not showing any chinks in the armor. What about some of the smaller banks, some of the smaller regional banks here? We haven't.
I like Ally. Ally's moved lately.
Has it?
And that's been a monster since the earnings.
It has been.
I'm cool. I mean, as you know, over the years, I always love these small banks. Very, very cool on a lot of these right now. It's personally, I've unloaded most of the small ones I own. I'm just sitting out this inning, waiting until I see some changes. The thing that's killing them is funding costs have gone up dramatically, and they just don't have the ability to put the money to work. So what it is they're starting to hit it in a lot of cases, they've got mortgages at 3-4%, and their funding cost is now, on new money is creeping up to that if they're selling CDs. And so essentially it's crossing over into the negative. Last time that happened was the savings and loan crisis in the 80s. And we all know how that went for a bunch of small banks. So if you see a small bank's funding rising dramatically, and they're not matching that with new loan growth, which most of these aren't, that is the biggest sell indicator you could look for.
Okay. All right. Now I wanted to ask you, Nate, about what's going on with Goldman Sachs. Looks like they're getting investigated. Is this anything that we should be worried about if we're Goldman Sachs investors?
I mean, so Goldman Sachs is a little bit of a different beast. The thing is they excuse me, they really tried their hand. They had the big Marcus write down. That didn't quite work out like they thought. And the thing is, Goldman Sachs always seems to land on their feet. As long as the market is trading and they're able to trade the flows, they're able to make it work. It seems when they expand into these other ventures, that's where it starts to get a little rough. I don't know enough about who their friends are in Washington to know, is this an actual real threat or not? They seem to have kind of come out fine in every case in the past. So I'm not sure that that's actually good or bad, but that just seems to be their history.
All right, Nate, we're going to let you go here. Nate Tobik, CompleteBankData.com. Cautious on the small banks and thinking some of the big banks still have some earnings power here with the rising interest rate. Great to have you on, Nate, and we'll talk to you again soon.
All right, thank you. Bye.
Have a good one, Nate.
We just had a nice push lower here. GE is now we know it's in the red here. So ill-gotten gains.
The hedge fund couldn't keep it up.
Just in the market, and the individual names too. It's all chop. If you're chasing, you're doing it wrong. Lockheed Martin's coming in a little bit here too.
Yeah,
take your money and run, market and spin. And I don't think that's
it
changed,
is.
Right?
It's a trader's market, and right now in 2022 and so far in 2023, it's been a trader's market. The trading has outperformed the investing significantly in 2022 and 2023. You got to take the money and run because there's so much chop. You're like, and you're sitting there investing and it's going nowhere, your account. But, if you can trade the chop, you can make some money too. Again, I know trading is hard. It's not for everyone. If you're a long-term investor, you got a day job and you're making one trade a day, maybe you just hold for the long run.
Yep.
I'm not going to argue with you. But if you're trying to sit here and actively trade, there is an edge in actively trading. You got to learn, obviously got to learn your technicals, but you got to learn, relationships and how, everything's related to each other. I think that's the most important thing. And nobody talks about relationships.
Well, one thing that I would say is I put in the chat, right? I want to remember, right? The market likes to hurt where it can hurt the most. For sure. And I feel like there's a lot of bullish tune out there right now. And a lot of bulls out there is saying that this trade is kind of easy right now. The rotation back to value could be wicked. And I do want to mention that because
and that's why I think on the pullbacks here, I'm buying drug stocks in the long-term account because I think it does happen. It's not going to be January forever. I think you're right, Mitch. I don't think this is the turnaround where we're going to see a firm go to $50, $80, $100 again.
Those days.
I think you've got a nice run, a firm, and people don't want to hear that. It's went from 8 to 15. The stock has doubled. This has doubled since the low. People are like, what are you talking about? I bought this at 50. It's 15. It has doubled off of the low here. It's been a really good move for a firm, a huge move. And I think, it's time to start thinking about ringing the register on some of these names. Again, using Tesla, Spinner saying NVIDIA, use those for your leader because that's where your leadership is. I mean, Square is a leader as well. Look at the move in Square. But a little bit upside capitulation yesterday, maybe, Joel. Just got a little bit silly in some of these names.
Yeah.
NVIDIA trading up $10. AMD ripping $6, $7 higher. Square ripping $10 or $12 in 2 days. It's a big move.
Yeah,
I won't argue if you're taking profits.
Yeah.
I don't know if it's over yet. But I won't argue if you're taking profit.
The farther that we leak here from in the S&Ps and stuff, those closes. If you're looking, if you've had some swings on and some things, and you're nervous about the Microsoft report, boy, I mean,
some people.
Yeah,
great point. There could be some people nervous holding these growth names through the Microsoft report. I'm kind of nervous. I have a lot of these growth names on too, and I'm like, maybe you don't hold them through the report. So. Again, something to think about. I'm still along the Rivian. It's been all over the place. What's that?
Oh, I thought they almost got you on that.
They almost got me. They didn't quite get me. I've given it a little bit of room there. It did make a new low. I probably should have sold it, but everything else was just holding up still. Now, who sells at a loss?
The bag got lighter. The bag got lighter, they say.
The bag got lighter. I'm still in there. I think I don't remember what I bought. I think 16.40 or something. I had given it some room. So I had 20 is where I was hoping for, but I don't know if Tesla rolls over. I may have to sell the Rivian. So I might sell today. I haven't decided yet. Depending on, I'm going to watch Tesla, NVIDIA, AMD as my leaders. Tesla's not having a good morning so far, so that's somewhat concerning for the Rivian, but it could turn around. So we're going to keep Tesla on our screen. Tesla continues to roll over. I might get rid of the Rivian. If Tesla can turn around, I'll keep holding. So I've been in this for like 2 weeks. A long trade for me.
A CIC order, cancel if close. Is that
yeah, one of those.
We talked about lithium names yesterday, and Albemarle gave some pre-announcement there. Let's go to ALB here. Fiscal year 23 sales at 11.3 billion to 12.9 billion versus a 10.18 billion estimate. Adjusted EBITDA at 4.2 billion to 5.1 billion, EPS to $26.33 on the high end versus a $28.08 estimate. Full disclosure, I am long some LAC. You guys saw that yesterday on live trading, doing the swing on that. Still deep in the green. We'll see what happens. It was giving me a little lift. It didn't give me as much lift as I thought, but who knows? Maybe towards the bell will continue. I was watching PLL continue yesterday too. We talked about that.
Yeah, the lithium stock's been hot. Well, I rang the register on LTHM. I'm still in ALB. I bought LTHM and ALB on the same day. I'm still in the ALB, so the one you're talking about. I'm holding on to the ALB. I put in the long-term portfolio. The bloody PE on this thing is like 8 or 9. I don't know. Maybe we're going to go into recession, the PE, and it is probably cyclical. We're talking about making possibly $33 a share. I mean, this company is printing money. And if you think, EV is for real, they got to get the lithium from somewhere. ALB is your major player. So I like the ALB. They're hitting it on good guidance, so it's never a good thing. So talking against my book here, you never want to see them headed on good guidance because the sales guidance was excellent.
Yeah.
The EPS guidance was kind of in line, and maybe that's the problem. But more of the problem, they buy the stock up last night, catch a few people, and then they hammer it. Just the reversals. There's so many reversals, just been wicked reversals.
Yeah, and did you see? Has there been anything on the tape here? Or is this just a good old-fashioned sell-off? The way we cut
market
through?
Not helping it, probably, Joel. The overall market,
yeah,
because we've been selling off there, and then a rising tide lifts all ships. And what would be the opposite of that? flood sinks.
Yeah, you've asked that
the hole in the boat drowns the boat.
The hole in the boat is not a good idea.
48.91 is the low from yesterday in the ALB. I'm
going to be holding my ALB. I don't intend to sell that one. I sold the lithium, LTHM. I'm going to hold on to the ALB. The ALB is a better one, I think.
Well, definitely we'll be watching what happens there. And don't forget, on the 27th, we'll be getting PCE too, right? That could change things up. Another inflation reading. Everyone's been looking at the Fed to start thinking about potentially a soft landing, right? Is the economy going to stay strong? We'll get GDP numbers. We'll see what else is being mentioned. Let's get maybe one more earnings report in here. It's about 8:55. We can get towards one more. I had Halliburton that I wanted to talk about. Let's go to Halliburton. Maybe we can take a look also at some oil stocks lately.
Sure.
Q4 EPS at 72 cents, beat the 67-cent estimate. Sales at $5.58 billion, beat the $5.58 billion estimate. They raised their quarterly dividend from 12 cents now to 16 cents a share. So not looking too bad there in Halliburton. I'll look to see if it holds the 40. That's what I've been talking about for the last couple of days. We'll look to see if it holds it.
I'm scared on all the energy stocks for the same reason. You've seen the drug stocks get hit. The energy has held up relentlessly. And maybe this is just the place. It's the low Ps. They continue to hold up. I don't know when we get this energy rollover. Maybe it's never coming. I've been looking for an energy rollover. It's never come. So I think these things set up to roll over, but I keep saying they're going to roll over and they don't do it. So I've been wrong on energy, but I'm sticking with my bearish theme on energy. I've been wrong.
The pop here, if you were paying attention to your dailies here, you had pair highs right at 41.30, right? And then they popped it up there in the pre-market on a couple occasions, getting right to 41.30 again. So the fact that you had two highs there and then it stopped it in the pre-market, that is a really, really good level. I'm going to go a little bit lower than Mitch. Mitch was talking about the psychological $40 level. For me, I don't think they really start to hit this stock here. If I was trying to protect some profits, I'd look at the 39.45 area. That splits a couple lows from the 6th and from the 19th. So there we go.
People asking me about my Apple hedge because I knew I hedged it to January. I let it go. I let it go. I'm eating the tax because I'm just looking and I just don't like the PE. I don't want to own the Apple stock. So I sold it. It would have my calls or the puts that I had would have been exercised yesterday, 150 and 155 over the weekend on Friday's expiration. So I no longer own Apple.
Really?
I let it go, yeah.
Okay.
That's how much I don't like Apple. I'm willing to pay the tax on it.
There you go.
I thought about it. I thought about rolling
it. Interesting one there.
I thought about rolling it. I analyzed the full day. I'm like, you know what? I just don't want to own Apple at this point. It's come back up here to 140. I feel like, trading 21 times. I just feel like the cash cow they are, unless they tell me about a new car, or something new.
We've been waiting a
it's
long time.
You've been sitting here, yeah. And you know what? It was all multiple expansion, and it was tough because my average cost basis was $25 on Apple. So I'm like, I got to pay a lot of tax on that. But again, it's just at this point in time, I don't know. I think I can put my money better to work somewhere else. So I am going to eat some tax.
Yeah.
Long-term capital gain. So, you analyze it. Sometimes you just got to pay the tax. You don't like the stock
Anything you'd
anymore.
be going after now, or do you think that you'd just kind of hang on to the sideline with that?
I don't know. Again, I've been, I've been buying a little bit of drug stocks on the pullback. I would go back in Apple probably if it came under $100. If it got back down to a less than a market multiple, I think I would go in it. But at this point in time, I let it go. I had it for 8 years. Sometimes you just got to let them go.
Yeah. Hey, sometimes sometimes better.
Joel's
like, I don't know how to do that. Joel's like, I don't know how to do all that.
It's a crappy tax bill to pay. I'll tell you that much.
Okay. All right. Apple had a really good day yesterday. Actually, a 3-day move here. I'd just be looking. We're in the red here, so let's look at that close at 41.11. Haven't closed in the 40 handle. Wow. You have to go back quite a ways here. You have to go back to mid-December, 143.21. So resistance support 37.90. That's like a 2-star there. That was did coincide with the previous day's high, but if you're looking at a day trade here, I'd say 138 support and 141.11 the close resistance. If you get that little sympathetic pop off the open, the 9:30 open, people, I took the short home overnight. I'm so glad. I'm gonna buy off the open. So that's what I'd be
levels
looking at
to watch today, Joel. What will scare you on downside action, and what would be the upside breakout level that we should maybe look for?
Oh, I'm firm on the upside here with 36.50 because that was a close, and now we're 20 handles above that. I don't even or below that. I doubt we see that today. We'll see what happens. On the downside, I can't give you any really good support until you get down to Friday's close, 88.50. And that was just it went red. It went red just for a few minutes off the open. They got a couple ticks below the close, and then they had the big rally. So, just incremental numbers going down to that intraday low from yesterday at 86.25. Triple D, any final thoughts from you here?
Chop, I'm keeping, and again, I'm in some of these growth names, short-term trades. Keeping Tesla on my screen as the leader. I do like watching NVIDIA, what Spinner was saying earlier, as a leader as well. Square, AMD, those are all your leaders for all the smaller growth stuff. So right now, they're not having a good morning. Let's see what happens after the open. Do we see buyers reemerge, or do we see follow-through? That's going to be the tell. This could be a turning point, might not be a turning point. There's probably a few people nervous to hold growth for Microsoft. If Microsoft does okay tonight, then, you might just see this growth rally continue. And maybe Microsoft, there is always the wild card that they maybe, say something not that great, but to cut more jobs or something, and then that's what you're going to see happen in this earnings season. You're going to see some disappointing earnings, but you can see job cuts around with it, and maybe stocks rally around it. So it's going to be a very confusing earnings season, to say the least.
Yeah, and so far the first moves have been pretty good head fakes, so we'll keep an eye on that. I just wanted to take a quick look at GE, now down $1.10 here as the report was dissected here. Now way off that pre-market high. So everyone, have a good day, and Triple D, I'll talk to you at the top of the hour.
Okay, thanks, Joel.
All right, we're going to wrap up here. We'll let Dennis get out of here. We'll see what you got in store for us today. And like always, you guys can keep up with Dennis on Triple D Trader on Twitter. Have a good one, Dennis. Go do what you do best, my friend. All right, that's going to do it for us on Pre-Market Prep. Like always, you guys can stick around. We got a great day for you guys. We're going to get into some live trading action. That's coming up next. Then you got Benzinga Live with AB, of course. He'll take a look at all the recent moves. And then Stock Market Movers. We get into the headlines, the expert opinions. That's really what Stock Market Movers is all about. If you guys like the interviews that we do here on Pre-Market Prep, well, check out the interviews that I do on Stock Market Movers, as I always go towards the analysts, the experts, the ones that you guys see out there on the different medias. They come right here on Benzinga. Why catch them anywhere else? Right here on Benzinga, you get to ask a question. That's the major difference, the competitive advantage that we have over other medias. A lot of the times, what do? They ask the questions they want to ask. If you have a question out there, you're working on your game, let us know in the chat. That's what it's all about. You guys get to run the show too here on Benzinga. So hit the thumbs up. Hope you guys appreciate that. And like always, I'm going to keep growing my book club. I hope that you guys get out there. I will throw up the link. Don't got to talk about it every day, but it's up to you guys. If you guys want to keep building on your skills, you guys can always jump into the book club. We'll be starting up really this Sunday. Don't miss it. Trading in the Zone. Mark Douglas up next. Live trade in action. Let's get into it. Let's see what this market brings today. Will it break through that 400 today? Looks like we got through it yesterday. We'll see what happens today. And of course, the question of the day. Is this a new bull market cycle? Ask yourself, ask others, see what they think. And of course, always bring the discussion back right here. Benzinga Pre-Market Prep. See you guys.